The U.S. Department of Agriculture released its January crop production, World Agricultural Supply and Demand estimates, quarterly stocks, and the winter wheat seedlings report on Tuesday. I'm Bryce Duskid, joining you inside the Nebraska Soybean Board Studio in Lincoln. We are joined today by Jeff Peterson. He's the president of Heartland Farm Partners. We break down this big data dump from the U.S. Department of Agriculture. So, Jeff, we've seen the markets react in a big way as you and I record this on Tuesday afternoon. Big picture, what did you make of these reports?
Oh, it was great to have a report that gave us some support in this market. And, you know, overall, I think as we dig into the numbers, they're just finally some nice supportive numbers all the way kind of across the board. So I'm looking forward to breaking them down today.
Let's do just that, Jeff. And first, I want to talk about the yield and production and how that looked for corn and soybeans.
You know, as we take a look at the U.S. yield, what we always like to look at is that how did the numbers compare to what the average guess, because that kind of gives the market ultimately what we're going to end up seeing. So they came in at 172 is what USDA did on the corn side. That compared to an average guess of 175, and that did come down about 3.8 bushels from where we would have been in the December report. And that was a surprise for the market. And so we take a look at the soybean side, came in at 50.2. That came down from 50.7 last month, and that was lower than what the trade was expecting. As we dig a little deeper in that, there was also some adjustments on the production side as a result of that. We ended up having the production on the corn side come down about 325 million bushels. So that's a big amount of bushels there. And over on the bean side, we ended up having the production come down about 35 million because of the adjustments we saw on the yield side.
So that's the supply side, and of course markets are driven by supply and demand. So how did USDA tweak the demand side of the equation?
Yeah, and the easiest way for us to talk about that is to go take a look at the ending stocks. And ending stocks on corn came in slightly lower than what the average trade guess came in at 1.552 billion bushels. Trade was looking for 1.597. And if we compare that to where the December report was, the December report was 1.7 billion bushels. So we came in lower there. Over on the soybean side, 140 million bushels was the projected ending stock for the 2020 crop. Average estimate was a 135, but that did compare to 175 million bushels coming out of the December report. So we did go ahead and lower the ending stock number. And as we dig in those numbers, a couple things that surprised us, I guess, and we take a look at over on the feed side, they did reduce the feed demand for corn, 50 million bushels. We also did see a 100 million bushel drop on the ethanol side. And in addition to that, we also did see exports come down 100 million bushels too. And when we bring that all together, they did bring demand down 250 million bushels. So as we come back, and the thing we always like to do, Bryce, is we like to look at that stocks to use percentage, and that stocks to use percentage came down to about 10.6% over on the corn side. And as we take a look at the bean side, there wasn't as many adjustments. We did see the crush go up about 5 million bushels. We saw the exports go up 30 million. So we saw an increase in demand on the soybean side, and that ended up bringing us in at a 3% stocks to use, which we were 3.9% in the December report. And what that would be is that for the January report, that would be the tightest stocks to use number that we've had going back in history.
Let's talk about outside the U.S. border now. Particularly, you and I spend a lot of time talking about South America. Any big surprises out of there?
You know, there really wasn't. We saw a little bit of adjustments there on the Brazilian corn, 109 million metric tons. That compared to the December report at 110. On the Brazilian beans, they kept those unchanged of 133 million metric tons. We did see some adjustment in Argentina on the Argentine corn. That came down 1.5 million metric tons to 47.5. And we did actually see the Argentine bean number come down about 2 million metric tons. And based on what we're seeing for the weather, we do think that going forward, there is still room to see those numbers go lower as we go down the road yet.
I'll ask you here in a moment about the long-term implications about this report, or short-term. We'll see how that goes. But right when this report came out, we did see the markets react in a big way. Kind of summarize the movement of corn, soybeans, and wheat.
Yeah, so as we take a look at that movement, initially there was a little bit of indecision actually in the market. They were slightly higher, a little bit lower, and then we started to see the strength come in. And really the reason for that really comes back from what we call the algo traders or the algorithms. And what they were actually doing is that they were processing the reports of news and bits and pieces on ending stocks and yield. And then once they seen it all come together, then that's where we started seeing the funds, speculative traders, other end users who wanted to get long step in and buy that market.
Of course, producers enjoy seeing that green on the screen, but do you think this is going to last? Where do we go from here? Reports out of the way.
Yeah, the first thing we do is we go back and take a look at those stocks to use numbers. And if we dig into that, one of the things that we notice, starting first on beans, a 3% stocks to use number actually would project a price in the upper 14s to low 15s, which really, according to what we're sitting right now, that would say that we're honestly probably a little bit slightly undervalued for what that number is. Over on the corn side, at a 10.6% stocks to use, if we were to look at where the current price is on corn, what it actually, that suggests would be a 9% stocks to use, not the 10.6. So what that tells us on corn is that they're factoring in additional items. What I think they're factoring in, I think they're factoring in the fact that we're going to see our exports not go down like what we saw with USDA. We could actually see them go up down the road. And how that would happen would be because of some problems coming on the safrinha corn crop, and also to see a further reduction coming out of the Argentine corn crop.
Jeff, if people want to keep following along with all the market reaction and things that are going to be coming out in the coming days, how can they find you on Twitter and elsewhere?
Yeah, go ahead and you can always reach at heartlandfarmpartners.com. You can also follow me on Twitter at jeffpeterson01.
Jeff, as always, appreciate your time helping us understand these markets. And as a reminder for our viewers today, you can keep up with the market information and tune in to the Rural Radio Network by visiting our website, ruralradio.com.